Ladies and gentlemen, thank the world. The time zones have all changed and aligned once again for summer or winter time. It's 6 o'clock in London. It's 1 p.m. in New York, 1 a.m. in Hong Kong, 3 a.m. in Sydney, 10 a.m. in San Francisco, and 10:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world today. My name is Patrick L. Young, the IPO-VID Livestream, Series 17, Episode 4. And if you've done your maths quickly, you'll know that's Episode 100 starts here. So we've got a bit of a Swiss imbalance, ladies and gentlemen. It was a story missed by the media this week, but it was discussed in Exchange Invest, the daily bulletin of the Bourse Business, published by yours truly. The future of the SIX Swiss Exchange Group, specifically its shareholder structure. Things look very, very interesting, and that was a most interesting read altogether, given the Credit Suisse UBS duopoly has now become a UBS monopoly, which upends the carefully cultivated Swiss exchange corporate structure. Bad news from India to Europe. For those who think that the European Union can force into the Eurozone central counterparty clearing, a cautionary tale. European banks will soon see Indian cleared positions require a jump in capital requirements from 2% of trade exposure to, and I kid you not, 1,250%. If you think that's bad news, well, you should try the world of crypto, ladies and gentlemen. In one sense, it was an indictment. In other, it was a sense of quadrophenia. Binance and their CEO, CZ, amongst others, have been sued by the CFTC. And lo, after some, induced a sense of foreboding. Events occurred with an element of forethought. The derivatives regulator of the world's largest economy set forth its charges against Binance, and as he labors this joke all the way through, its CEO CZ tweeted just one digit, 4. In one sense, an indictment. In other, a sense of quadrophenia. Binance and the CEO are in, an interesting position right now, ladies and gentlemen, as is Coinbase. And I'm going to quote our guest. We believe Coinbase is a cash-burning regulatory nightmare with limited upside. Here's why, went the story. Brother, can you spare a coin this week? The best news is, ladies and gentlemen, right now for the next hour, the man behind that analysis, James Block, is our guest today. And the topic is James Block examining dirty bubbles. A lifelong Midwesterner, James is a psychiatry resident at the University of Michigan. Gosh, I suppose that could make you the Sigmund Freud of crypto in some ways, having completed an MD Ph.D. at Wayne State University. During medical school, he started researching cryptocurrency markets and discovered red flags concerning fraud and money laundering. This research grew into a newsletter. Get it, ladies and gentlemen. It's absolutely epic. It's currently free. I don't know how long that's going to last. It's really, really worthwhile. Dirty Bubble Media is dedicated to original investigations of various aspects of the dirtiest bubble of the 21st century. And the track record, ladies and gentlemen, is awesome. And I speak as somebody who's been publishing Exchange Invest for the last 10 years and indeed has good grief. 30 years now of experience in online publishing alone. Dirty Bubble Media has exposed and contributed to the unravelling of two major frauds so far, Celsius, Network and FTX. And indeed, I would have to say it looks as if they've got a hand in a third, which could be Binance, depending on what happens over the course of the next few weeks. And they were also busily exposing political malfeasance at Signature Bank of New York. James Block, welcome to IPO-VID. Fabulous to be talking about dirty bubbles with you today. Let's ask the obvious question. Where in the world are you today?
Hi, it's great to be here. I'm in Northville, Michigan, which is about halfway between Detroit and Ann Arbor.
Halfway between Detroit and Ann Arbor, therefore leaves you not altogether too far away from the great trading city of Chicago as well, the backbone of the Midwestern commodities markets. Absolutely marvelous to have you here on the show today. Thank you very, very much for joining us, Jim. So tell us a little bit. I mean, we blithely go across that in one sentence. You study in psychiatry and you suddenly decide you're interested in crypto. How did that come together?
So I always liked finance. In fact, I almost ended up majoring and focusing on finance and sort of took a turn halfway through college and ended up going into medicine instead. But I've always been interested in how financial markets work. And in particular, the history of fraud and speculative bubbles has always fascinated me. So, it was towards the end of my medical school. I had more free time than I'd had in years. And I stumbled across Tether. Actually, was the first thing I learned about in crypto. And I realized pretty quickly that there were a lot of warning signs that it didn't seem like anyone else was paying attention to, and kind of just spiraled from there.
Very interesting. So it spiraled from there. And what first motivated you while you were reading about this stuff and so on to think, I've got to share it with the world, what I'm thinking?
It was sort of a gradual process. So, I started out, using Twitter or whatever, and I would just say, okay, well, I found this weird thing about this guy who runs this multi-billion-dollar financial company, and he's lying about his entire resume, and nobody cared, right? Nobody paid attention. If anybody did pay attention, they'd say, you're an idiot. You don't know what you're talking about, even though I'm literally copy and pasting from the guy's website in many cases. And so it kind of just made me upset. And I kind of kept working harder and harder to prove my point, and it ended up becoming like me spending a lot of my time digging into these things and, starting to write full articles about it. And, I just kind of gradually built up from there. Now I do it because it's just fun. And I mean, I've gotten to meet so many interesting people over the last year and a half, all across the world in all sorts of different fields that I never would have met without doing this. So that's why I keep doing it.
I think that's fabulous altogether. It's great to hear. And let me just break off at the moment while we're talking about Dirty Bubbles with James Block this afternoon. Good evening, James, Patrick, and everybody, says Marcus Ward. Marcus, it's lovely to see you. Thank you very much for joining the show. If you've got a question about any aspect of the crypto bubble and indeed frauds, then you've got a perfect guest to ask. Thanks very much for joining us today, Marcus. So, James, you mentioned this fact of you find somebody with a completely empty CV. How did you go about first publishing? I mean, did you just arrive on Substack fully formed, or did you send a few emails to a few friends? How did that work?
So it started out just using Twitter, and I would just share like, oh, I found this random, piece of information, and it grew into, trying to create a full story using that information. And, actually I started using Substack more because I was concerned, somewhat presciently, I was concerned that my Twitter account might get hacked or something, and I would lose all of my information. So I actually started using that more just to like save the information I'd been using and put it in an alternative platform. And then from there, I started actually realizing that I had a great platform to do the real kind of work and prove my point in a way that you can't do just using social media. So that's kind of how that started.
So how long have you been doing the newsletter now?
I think I started in like February of last year. So a little over a year. January or February.
A little over a year, but on the other hand, in the crypto world where everything goes by dog years on steroids, that must feel like a decade if you were in the normal world. I mean, there've been so much happening.
Yes, it really, it's amazing to think it's only been such a short time, but it really has. And it's been amazing watching how this whole ecosystem operates. It's just, I don't know if there's any precedent in history. There may be, maybe far back in the past, but I mean, it's incredible.
So you say it's incredible. Let's just understand that. You mean from the perspective of how much fraud and illegality is going on?
Just how stupid it is. I mean, like, this is something I tell a lot of people, like friends and family who, and I wasn't really talking for a long time. I was doing this anonymously, so I wasn't like sharing this with anybody who knew me. And when I started explaining all of this stuff to my friends and family who had no exposure to crypto, and they would say, it seems so complicated. Like, how do you understand all this stuff? And my answer was, it seems complicated because it's just so dumb. And they've intentionally made it as complex as possible to obfuscate the fact that it doesn't make any sense, right? All they're doing ultimately is moving stuff around in a circle and making it seem like there's value created somewhere when there isn't. There's fundamental flaws in their understanding of economics and finance. And that's what drives the whole ecosystem, if that's what you want to call it. So that's, I think, the underlying thing that's the most fascinating to me. And then also just the fact that, hidden within there is billions and billions and billions of dollars of money laundering and fraud, making this, I really do think, and not to be corny, but I do think it's one of the dirtiest bubbles in history.
Yes, it's quite incredible. I mean, taking it way back to a long time before you were even studying, I can recall, well, writing a book, 1998. It was published in 1999 called Capital Market Revolution. And actually therein, I was discussing digital assets and the future, what would go on and so on. And I just thought it was so exciting. For the record, once again, I will restate the fact that I did not talk about the blockchain at that point in time. And therefore, I'm one of the few middle-aged men in finance who is not claiming to be Satoshi Nakamoto. But at the same time, it's quite amazing because I now find myself, I'm ending up like sort of Don Cupid, the man who was almost sort of atheist within the whole infrastructure of the Anglican Church because he almost didn't believe in what was going on around him. And I sense that you're in the same sort of position because certainly what you mention, one thing that I observe about crypto is that it's the first time we've had a technological innovation in financial markets that's actually more expensive than anything's come before. So if you try to trade $1 million of crypto, it actually is very expensive. You try to trade $1 million of, say, a futures and options contract at, say, the Chicago Mercantile Exchange in Eurodollars, and it costs you nickels and dimes to manage to execute it, clear it. Somebody looks after it for you for up to 3 months, actually for years on end if you buy a far out future. And yet, the whole crypto thing, it just seems expensive before you even get into the underlying rationale of the people who are behind it, which has always been a worry to me. So, I mean, interesting that you mention, the fundamental nature of crypto being dumb, as you put it. Let me put it to you another way. Do you think the original idea was dumb, or was it good, but it suddenly got very quickly hijacked by a lot of nefarious actors?
I mean, I think that, so I guess the question would be, is Bitcoin good or bad? And, it's sort of like the statement that guns don't kill people, people kill people, right? So Bitcoin in and of itself is just, it's a concept that I think isn't a bad idea. I mean, again, it was originally designed to be used as digital cash, not to be used for what it now is supposedly, which is a quote unquote store of value. Obviously, it doesn't really function well as a currency simply because of the way it's designed. It's like self-contradictory almost, right? Like the more popular it becomes, the more expensive it becomes to maintain the network, the more difficult it becomes to use. And there's no way you could operate an economy on it. So then you have to build on these second layers like Lightning and things to try to work around it, which then defeats the whole original purpose of the protocol, right? So I don't think it was a bad idea. Do I think that, I mean, blockchains in and of themselves are not like, it's just a ledger, right? I mean, it's decentralized ledger. Like, okay, a bunch of people writing down stuff at the same time and keeping separate records. Okay, I mean, those are all fine, but like, I don't think it's as revolutionary as it's been made out to be. And I don't think that it's as useful as it's been made out to be. And that's why there's been no real adoption, right? I mean, why isn't Google using this technology if it's so revolutionary? Why isn't Amazon using it to do their shipping, like keep shipping records, or like, et cetera, et cetera? Like, nobody's using it because it's not that great. So I think that the fact that it's been around for as long as it has and there hasn't been any real adoption tells you a lot about the actual value of that technology.
I think those are very, very interesting points. And I'm sure you're going to see some interesting remarks from people. For now, good evening, gents, says Peter Secon. Thank you very, very much for joining us, Peter. I hope Ari is well, and it's great to see you all together. So, James, you mentioned something, and I think it's great that we actually have you as a medical practitioner here, because one of my bugbears in finance always is that even legacy finance is great at complexifying things. And I always use the metaphor that if we were sitting in hospital and the doctor comes in, or whatever sort of physician comes in and goes, I'm about to try and cure you, I'm going to give you, in this case, surgery or something. I'd love to tell you how it works, but actually it's complicated, so I can't possibly tell you. I mean, I believe 99.9% of people, even the ones who are effectively all but tragically clinically dead, are going to be unplugging themselves from whatever machines are plugged into them, trying to climb out the window and flee. Yet that's how finance works. Finance says, oh, I'd love to explain how something is, but it's complicated. Whereas instead, doctors, and their bedside manner differs, but they all basically sit down and go, well, I'm just going to take this tiny little tube and we're going to stick it in here, and then somebody's going to do this and this and that. And they make it all sound very simple. And 2 days later, you curse their name because, of course, it was incredibly painful when the drugs wear off. But at the same time, it's understood. I'm interested. Do you think crypto learned from legacy finance and then leveraged that complexity to make it sound even more complex still?
I mean, I think so. And a lot of what they've done, that's what's so funny about it, is it's so innovative, but in practice, all they've done is reinvent various types of finance, right? Like the DeFi protocols are basically lending, and they're for depositing and lending, or they're decentralized markets, but they essentially function like pools of assets. I mean, nothing is really that creative. So yeah, did they learn from the complexity of ordinary finance? Sure. And I also think that they understand their target audience well, right? So they pair a narrative that, if you think about it for about 2 seconds, is convincing. And then you pair that with the promise that you're going to become tremendously wealthy. And a lot of people are susceptible to that combination of a simple explanation that hides complexity, even though, and then saying that, well, it's complex if they ask any questions, and you can accept that. And then on top of it saying, by the way, you're going to be very, very rich. Or in the case of Bitcoin, the world is going to collapse and everyone is only going to use Bitcoin, and you will literally rule the world because you're one of, you hold one of 22 million of these coins or whatever. Like it's almost like a messianic narrative in some cases. And, it targets a specific portion of the population, particularly with certain political attributes or beliefs. And that's how a lot of these things work. It's sort of like a cult in finance. So
I think that's a great point. I know we've got a couple of questions and comments. I just want to say good evening and good afternoon indeed, to a fellow Midwesterner, to you, James. Anne Berg, coming to us from the city of Chicago. Anne, it's lovely to see you live today. I hope all is well in your world and it's not too cold out there. I'll come to Peter Secon's question in a moment, but actually you hit on something that I really always think is incredible. It's this sort of how Bitcoin has become almost like a religion. And in the course of bit carnage, in the course of the last year of crypto winter and so on, it strikes me that so many people have been out there going, oh my goodness, everything's going wrong for crypto. But suddenly the inner cult of sort of Bitcoin seems to keep strengthening. And actually around the crypto world, I think we saw it even with CZ yesterday. Every time you attack, everybody sort of forms this instant phalanx, puts their shields in the air, forms a circle, they hitch the wagons. I'll try to use as many cliches as possible. And they say, it's the outsiders trying to attack us because we're the future.
Right. Well, I mean, there are actually people, I think, seriously making the argument that the collapse of Silvergate, Silicon Valley, and signature banks were conspiracies by the government to destroy crypto. They believe that they are that important. They literally think that the government is afraid of them. They really believe that. And, I haven't ever written about these sorts of things in matters of faith, I guess, because there's no point, right? There's no rational argument that's ever going to convince someone that they're wrong. And, you pointed a good thing, or an interesting point, which is that belief often strengthens in the face of adversity or being proven incorrect. So, the thing I always think of is the example of the various churches of the, mid 18th or 19th century who had people prophesying that the world was going to end at a certain date. The world would end, and then, obviously they'd be proven wrong. But the people that stayed, actually, their belief became even stronger. So that's a mechanism that's true for any belief system. And that's, Bitcoin is basically a religion of economics and money, and it's fascinating. It really is interesting.
I agree. I think it's really, really fascinating altogether. And indeed, Peter Secon has jumped in with a couple of questions. And well, I'm going to take the second one first, actually, if I may, Peter, because he says, how do we actually legitimize crypto projects? How does the crypto industry clean itself up, James?
Well, they could start by offering a product that actually produces something of value. That would be a good place to start, because most of what these projects do is they either create a token that's a security and then they don't register it as a security. It has no intrinsic value, no link to anything in the real world. And they use purely hype to drive the price up, or market manipulation in many cases. Or you're offering some sort of protocol or service that allows you to trade around in these tokens, which again have no value. The closest thing to something with real value in crypto are stable coins. And, in theory, there's not a bad idea. Like it's basically digital cash in a sense that, maybe was originally intended by the quote unquote Satoshi or whoever it was who created Bitcoin. But again, the problems with those things are so immense. I mean, fundamentally you have to then trust someone to hold the dollars and back the underlying token, which again defeats the whole purpose of blockchain, which is that's supposed to be, absolutely trustless. And so could there be, theoretically, I mean, again, could there be uses for blockchain? Sure. But the problem is that none of the tokens or projects currently in existence that anyone can invest their money in, at least publicly invest their money in, none of them are required for that to be true, right? Like anybody could. So an example would be Signature Bank, which had its own blockchain called Signet that they used internally to move money around. That was a copy of ERC20, so the Ethereum blockchain. They just hired somebody to make it. Right? They could theoretically, if they'd wanted to use the Bitcoin method, they could have copied that protocol and started from zero. Anybody can do that. So the idea that the projects that currently exist or the protocols that currently exist have any value is nonsensical because no one's actually using it to produce anything of real value.
And I think also the other interesting point here is that when you look at technology, I mean, my argument all along was Bitcoin's fascinating because it's essentially the gateway drug into a kind of a new digital economy, whatever that might be. But it essentially is the Model T Ford, because I'm old enough to remember when I was writing my first book in '98, we had things like beans. I mean, you couldn't move. I mean, the US, Australia, the UK, lots of parts of Asia and Singapore, every bus was plastered with beans and these other alternative currencies that were going to suddenly come around, which were essentially blockchain free or digital ledger free cryptocurrencies. And they didn't have anything behind them. And guess what? They all hit 2000 AD, the dot-com bubble exploded, and suddenly people were like, well, actually, this money that comes out of the ATM is kind of more efficient, and my credit card works, and why do I need this? And I think there's been an incredible degree of ignorance, and people haven't really thought about that sort of stages of how things developed. But at the same time, we have, we've seen Bitcoin has come along, and it's been like the Model T Ford, because it actually got people to sort of pave the roads as the Model T Ford did, and essentially created something of an economy around it. Although I must admit, I'm minded to think at the moment. I mean, I read an article actually this morning. Somebody at, I think it was Bloomberg, was talking about, the worry about Binance is that it's the epicenter nowadays of the cryptocurrency Bitcoin ecosystem. You mentioned that word earlier. And I'm left thinking, yeah, but that's an ecosystem a bit like the ecosystem of, I don't know, World of Warcraft or TikTok. I mean, if either of those cease to exist tomorrow, civilization pretty much progresses unimpeded. It's just that quite a lot of people who like it aren't very happy.
Yeah, it's very true. I mean, the question of the impact on the real economy when this stuff goes to zero is an interesting one. And I think that we're going to find out. There are some fairly reputable traders who have gotten into the crypto world, like Jump and Cumberland are a couple examples of that.
Yep.
Who may have very large exposures. We have no idea what their financial situations are, but if, say, the Department of Justice tomorrow was to say, hey, Binance is a criminal organization, by the way, we just arrested CZ, and we're shutting down the website. I don't know what would happen. I don't know how much of an impact it would have on the real economy, but I guess we would find out. But again, it wouldn't be because anyone's using it for anything of purpose or value creation. It's merely because people have dumped their money into something totally speculative.
Yes, and it's an investment issue. And with the exception of El Salvador, where actually they haven't really reached any great degree of breakthrough the last time I saw it, because I think 80% plus of the economy is still actually going through cold hard cash and credit cards. It's not really going to have an impact. Now, that leads me, let's just carry on to the second question here that we had from Peter Sekon. And he was asking, actually, as I try to get the right button, do you consider Ethereum, brutal, as SaaS, scam as a service?
Yeah, so I actually referred to that in a previous podcast with Laura Shin, who's a crypto podcast person. Yeah, I do. Because what is it used for? Again, it comes back to the same question. Is there anything of value produced by these protocols? Is there anything of value being done using these transactions? And I haven't found it yet. I've looked at a lot of these different projects. I haven't found one that actually, makes things more efficient for people or is actually used by real businesses to do business. It's used to speculate, and it's used to move illicit money around. That's what it's 90% of it's used for. Are there people like, could I send you, if I had crypto, could I send you $100 in Tether to your address from my address, and then you'd have it? Sure. But I could also do it with Venmo. right?
Yeah.
And I mean, the United States is kind of behind other countries in terms of like electronic money and electronic uses of money. I think the UK is kind of far ahead of us, although it seems like there may be some consequences of that in terms of money laundering as well. But you know, we're behind, and we still have options that are perfectly valid that don't cost anything, right? Like it's free for me to send $100 on Venmo. It wouldn't be free to send it on Ethereum. It wouldn't be that expensive anymore. But again, it doesn't create anything of value as far as I can see.
It's quite fascinating because I think a lot of people are still rooted in a sort of Swift mindset of 15 years ago, where it cost you about $15 or $20 to send anything. And at the same time, it took 3 to 5 to 7 days. And everybody eschewed all knowledge of the payment when it was en route to you. And then suddenly it would finally turn up just when you more or less had given up hope it was going to happen. Whereas you're right. I mean, I think the European and UK system, and one thing we have to actually give the European Union credit for, because I'd be quite hard on them on a number of topics, is how they have actually worked very, very hard to improve the payments regime. There are problems at the moment because they've just introduced some harsher regulations in relation to AML and KYC, as we're seeing, because a number of payment providers actually the last couple of weeks have had huge problems, as we know, to our own cost when we were trying to pay staff salaries this week. But it's very interesting. So, okay, we've talked about the general philosophy, we talked about what's going on. I gotta say, I love reading your newsletter because you are not, as we might say in my native Ulster, behind the door in expressing your sentiment about these sorts of things. It's pretty brutal stuff sometimes. It's very elegantly written. You looked at a couple of things in the course of the last couple of weeks. Let's get to Binance and CZ in a moment. Let's start by looking at Coinbase, because I opened the show with your one-liner, which certainly drew, I think, anybody except the dead into reading your missive last week. Tell us a little bit more about what are your reservations on Coinbase?
Well, I mean, there's several, right? I mean, first, it all kind of goes back to the same question, which is there anything of value created by these protocols? If the answer is no, then what is Coinbase's business? Their business is allowing people or assisting people in speculating in worthless tokens, right? Essentially is what they're doing. Approximately half of their business, obviously it fluctuates, but approximately half of their trading volume is Bitcoin and Ethereum. And then the rest of it is others. And a lot of those are really, really, really scammy projects that, any reputable or reasonable person would not want to be sending to letting like normal individuals invest in these things because they know they're going to lose their money. Coinbase's model was based largely on charging very, very high fees to individual investors. And then obviously institutional investors got a much better deal. So the first thing is that their business model is unsustainable, right? So if crypto survives and if it becomes something that, lasts forever and is a good industry, Coinbase's fees are not sustainable and they would be outcompeted by other entities entering the market. So that's the first problem with Coinbase. Even if they're right and the industry is a good investment, they won't be able to do what they've been doing in the last couple of years. Second, obviously they face some significant regulatory problems with the recent moves by the SEC. I don't know what happens with that. I'm not a securities lawyer, but it certainly seems like a decision in those cases against Coinbase would be an existential threat to significant portions of their business. Again, if half of their trading volumes are non-Bitcoin and Ethereum, assuming that those are still considered commodities, that's a significant portion of their volume that's at risk. Staking has become an increasingly big portion of their revenue, which staking models typically are essentially Ponzi schemes if you look at how they actually operate. Some combination of Ponzi and pyramid scheme. It depends on how you look at it, but they're not sustainable again. And those are apparently securities as well. So if Coinbase loses these things, they lose a very significant portion of their revenue. So that's the second problem. And I think the biggest problem for Coinbase actually has nothing to do with their business at all or any issue that they can control, which is that the biggest entities in crypto are frauds, right? I mean, Tether and Binance dominate the industry. So if anything happens to Tether or Binance that has a significant effect on crypto markets, Coinbase will suffer as a consequence, even if they were perfectly legitimate and doing everything right, which they aren't, but even if they were, they would still be at significant risk, right? And then something else to consider too is that they've been increasingly dependent on interest income from the USDC stablecoin because they have a partnership with the issuer called Circle, and that actually, after the collapse of Silicon Valley and USDC temporarily depegged because it turned out they had $3 billion in uninsured deposits sitting in that bank. Fortunately, the government bailed them out. So it's funny that crypto hasn't said thank you for that. After that depeg, USDC's market cap has continued to drop, and it's down to like mid 30 billions. It's dropped like $7 or $8 billion in the last like couple of weeks. And that's a significant portion of their income that's being drained out slowly. If USDC goes down, then they lose that revenue as well. So they've got a lot of risk facing them, and I don't see a lot of upside in terms of, even if things go well, they would be outcompeted in the market.
Yes, I mean, I think you're right. And the one thing certainly always struck me is going back to this, just the fundamental fee issue. We have a problem there, James, as we're discussing dirty bubbles, in how Coinbase can manage to adapt, because its fee level is essentially something that, if you take something like, say, the futures and options business, another area where there's been a lot of speculation over the years, well, fees there have dropped by 98, 99% over the course of my career, which lasts several decades. If you do that to an incumbent like Coinbase, it's incredibly difficult to see how they make money, even after the first 25, 30% falls. We've got a couple of great questions actually coming up. So first of all, I want to go back to Peter Secon. He's asking, James, how was your work around forensic blockchain over the last 18 months, and how has it evolved? Have you any interesting findings you can share?
Yeah, so that's sort of where I really started doing this, was just playing around with blockchain data, which is publicly accessible to anyone and really isn't that hard to interrogate if you can just use Excel. You can get most of the way there just with that. Frankly, I haven't been using it that much the last couple of months because it hasn't been relevant to the actual problems. And the problems are things in the real world, like legal problems and banks and other things that, for example, it turns out that in spite of all of these things operating on this blockchain, that all of these companies mysteriously are still totally dependent on fiat currency to operate, right? At some point, somebody wants their money back, and at some point they have to pay people their salaries. And so that's where I've really been focusing my effort, because I think that that's what's really important. I would say in terms of interesting findings, the two most interesting things I found, one of them was, I've published both of them, but one of them was the fact that Binance US, which is ostensibly a separate entity from Binance, had sent billions of dollars in crypto. And basically there was like a round trip of billions of dollars in crypto between Binance US and the main Binance exchange. And that temporally you can prove that at least a certain portion of U.S. customer withdrawals were paid out using money that was transferred from the main Binance exchange, which suggests that they aren't separate entities at all, which we already basically know that. I mean, there's a lot of other published work, including the recent CFTC report, showing that they're basically the same company. But it shows that if the main Binance exchange goes down, that the Binance US customers may also be at risk. And I think that was really important. The other thing was looking at the relationship between FTX, Alameda, and a company called Genesis Block in Hong Kong, showing that they were the same company in terms of blockchain transfers, and that there was billions of dollars transferred between them, suggesting that part of what FTX's actual business model was essentially capital flight out of China.
That's a very interesting point, the capital flight out of China issue, which I think is something that hasn't really been discussed a great deal in terms of the Alameda FTX nexus, where, well, let's face it, there were so many things that were always truth was greater than fiction with the whole FTX story that I think it's going to occupy people for many, many years to come. Fascinating discussion discussing dirty bubbles with the crypto economies. I think foremost forensic economist come accountant of the moment. And he's qualified as neither of those things, ladies and gentlemen, which just goes to show that, well, in some ways, I suppose what one might say the English Victorian era of the specialist outside their field is still with us. And it's great to see the autodidacticism of James Block on show today, which leads me actually to an interesting question, because I want to come back to this. I mean, you are a resident in psychiatry. Anne Berg asks the question, as a resident in psychiatry, can you explain the apparent level of criminality among crypto practitioners and their professed belief in effective altruism?
Maybe not from a psychiatric perspective, but from a philosophical perspective, I think it's pretty straightforward, actually, which is that, they're effectively just utilitarians, and they believe that the end justifies the means. And if you read, There's various figures in that, and it happens that I was interested in that whole movement a few years ago, so I'm sort of familiar with it. It's all about doing calculations to ascertain what the best thing you can do for humanity is, and it leads you to some very weird places. For example, a lot of these guys have ended up spending all of their time and effort trying to create friendly artificial intelligence, and basically they're predicting that even if there's this very small chance that there's an evil AI that can take over the world and kill everyone, we have to fight against that, and that's why we're going to spend all of our money and time. And actually, incidentally, SBF donated some $500 million, I believe, to one of those entities that was doing this type of research. So it's just their belief system, and somebody like Sam Bankman-Fried, who is also a narcissist and a sociopath, they can justify their actions by saying, well, this is for the greater good, right? I mean, is it okay to steal billions of dollars if you do a lot of good with it? I think that's makes a lot of sense as to how these things, and also just like how these people think. They're very rigid and very much like programmers in how they think about the world.
I think that's a brilliant answer. And in fact, I do believe that Anne Berg at this point in time, once she hit the button on utilitarianism, I suspect that she jumped out and did a lap around the outside of her panopticon and was suddenly punching the air in sort of a Benthamite figure of adulation at what you're talking about. Because certainly, I mean, you hit the point about SBF, a narcissistic psychopath, which I think is probably the nicest thing that some people have said about him for months on end. But it's incredible to think that he could manage to drop numbers like, 50 million, 500 million here and there. I mean, as the old saying goes, sooner or later, you're talking about a lot of money. Jeff Cutler, thank you very, very much, Hanberg, for your brilliant question. Really a joy to see you today live. Jeff Cutler, a former IPO-VID guest, he has joined us to say, hi, guys. What is the scenario if Coinbase fails to make its model work and Binance goes down? Globally speaking, other exchanges are niche by comparison. Will that expose the uselessness of it all?
Yeah. But I mean, also you have to consider that even Coinbase is somewhat niche compared to the size of Binance, right? Binance is something like half of the total crypto market in terms of daily volume. They hold tens of billions of dollars in assets versus other crypto exchanges. So the failure of Binance is going to be very interesting, I think, for everyone. And I think it would be existential for the whole, again, I hate calling it an ecosystem, but I haven't figured out a better term for it. Would Coinbase survive somehow? Sure, it's possible. They have a lot of cash. Could there be some version of crypto that survives and is regulated? Sure. But the problem is that all of the mechanics that got people interested in crypto, which were the wild swings in price that were largely products of manipulation and fraud, if there was a truly regulated securities, then it won't be possible to generate those kind of returns, and people won't be as interested in it. So, in one interview, I think I said that I think Bitcoin survives as sort of like people who operate ham radios and have like that kind of, niche hobby where people will like operate their little Bitcoin miners in their basement, and then they'll have little conferences and things. I think that's probably where this goes long term, but I guess we'll see. I'm going to have a lot of Bitcoin people coming after me now. So.
Well, yes, you're going to have 21,000 holders right down to the last Satoshi potentially coming after you at this point in time. And I suppose that actually, great answer to the question from Jeff Cutler. Thank you very, very much, Jeff, for your question there. James Block's coming at us fast and furious today in terms of what's going on. Marcus Ward asks a very interesting question. Therefore, does Bitcoin have intrinsic value or not?
I mean, that's the question of value is something that can't be easily answered, right? Like, can you value a company based on discounted cash flows? Sure, that's different. But like, does gold have intrinsic value? I mean, I guess you can use it for certain things, but clearly the value as of today is, I don't remember how much it is per ounce, but clearly most of that value has nothing to do with its industrial applications. It has more to do with people's belief in its value. So does Bitcoin have some intrinsic value because of people's belief in it? Yeah, there's no question that there's a solid cohort of people out there who really believe that this is the future of finance. And they literally believe that Bitcoin is going to become the new gold standard, and that every country in the world will be forced to use Bitcoin instead of their own fiat currencies. They really do think that's going to happen. So when you have people like that who believe it that fervently, it definitely has value. I mean, the question is how much compared to what it is right now. and how much how much value will it retain when the vast majority of people who are investing in it, which is for speculative purposes, when those people go away or can no longer move their money in and out of that crypto economy, which is happening very quickly, then we're going to find out what the intrinsic value is. And my suspicion is it's far lower than what it is today.
I have no idea what the value of Bitcoin is in relation to anything today, simply because it all seems to me to be quite surreal. And I think, having held a few bits and pieces from pennies on the dollar, I've really got no idea where we're at the moment. But it's very interesting. I think you hit the nail on the head just a moment ago, talking about it sort of almost its hobbyist or cult value. And it strikes me that what happens is we're always going to have a value for Bitcoin in the same way that we always have had a value for horses, which were once the epicenter of the industrial economy and are now a wonderful hobby for lots of people around the world. And indeed, the one that really struck me the other day was the explosion in interest in ham radio. So actually, there's been a vast expansion. I can't remember where I read the article, but there's been a vast expansion in ham radio in the course of the last couple of years, which strikes me as totally oxymoronic. I mean, why people want to bother with huge wires on the roofs and this, that, and the other, because they can go out and, well, get everything over the internet like we're doing today and talking from a couple of thousand miles away from each other. So yeah, I suspect you're probably right. That's where it's going to go in terms of it will always have a niche interest. So let's look at this week's events. I mean, we've had this incredible 75 pages. I've got to say it's gripping. I mean, really, really interesting. Apart from anything else, I caught up on the fact that I hadn't realized that AK-47s were now going for $600 and above. It really, I mean, that's a big arbitrage market, it has to be said, over the course of many years, depending on where the AK-47s have been distributed to. But looking at the CFTC's opening salvo yesterday, and okay, yes, it's true, Chairman Benham is going to the House Appropriations Committee this afternoon, so therefore it's highly appropriate that he would suddenly come out with this indictment just when he's going to go to his political masters and say, please give me my money for next year. But nonetheless, what did you make of those 75 pages of documentation?
It was damning. And it was damning in a way that you wouldn't expect a typical civil lawsuit to be. They provide some pretty interesting direct quotes of various internal chat logs, basically with executives admitting to breaking the law in terms of know your customer anti-money laundering principles. They have CZ himself telling someone to break the law and then saying, let's not have anything in writing. Can you use this, Signal, which is an encrypted chat that then can auto delete? They literally have him in writing saying that. So, yeah, it's pretty amazing. I mean, yeah, when you have comments of the chief compliance officer of your organization making comments about it's okay that Hamas is moving a few $100s at a time, or that they move a relatively small amount of money at any one time, and AK-47s only cost $600. I mean, it's shocking. And what it shows, and I think what a lot of people, especially the crypto believers, have missed, and this is something I tried to point out in my article about this today, is that the CFTC wouldn't have any way to get a hold of CZ's phone, but they claim to have possession of it. They claim to have been looking at his Signal and looking at the chat logs in that Signal. So how did they get a hold of that phone? Right? It suggests, and we already know based on previous media reports, that there's a criminal investigation into Binance that's very far along. There was a Reuters piece about maybe a month or two ago, I don't remember exactly, where they were talking about different components of the Department of Justice arguing about whether it was time to indict CZ then, or if they should wait a little bit longer and get more evidence. Apparently they've waited another couple months, so maybe they're getting close. But the fact that they have that evidence is just absolutely damning. And Binance has tried to claim that they're going to settle. I mean, I don't know. I guess there's maybe some world where that happens. But I don't see why they would, if they have, because these guys were not careful, right? These guys were not trying to hide their tracks, really, and they did to some extent, but they didn't do a very good job. And with the amount of evidence that is shared just in this indictment, not counting all of the information that we have in public reports and everything from the Wall Street Journal, the Financial Times, Reuters, showing various aspects of these conspiracies that they've been engaged in over the last few years. I mean, I got to believe that criminal prosecution is coming, and probably sooner rather than later.
So there's a lot to unpack there. The first thing I got to say, so that you get a chance to actually breathe, James, because you're telling us so much pithy information today, is the one theory I've had about Binance recently was perhaps it was like that bank in the Bahamas, which for many years was the epicenter of banking for stars and all sorts of people from Hollywood and other Americans who were evading the IRS. And every time they tried to close it down, the CIA said, oh, not so fast, because actually that's how we're funding 150 different revolutions, absolutely none of which I think ever succeeded in South America, and therefore was going to affect the American Secret Service's work overseas. That's one theory I have as to why Binance is still with us at this juncture. But looking at what you're saying, I mean, yes, the fact that they have so much information, and yet also the report goes, and we keep asking Binance for information, they refuse to give us anything. Fascinating. Obviously, it's a civil complaint. I mean, we were talking about this actually just before the show went live. And what we therefore need is a nice, big, friendly criminal investigative agency with lots of litigators, like, oh, I don't know, pick 4 letters out of the hemisphere there and distribute them. I would say SDNY. That could be the thing, which certainly gives us the opportunity that it's going to go forward. Really fascinating, as you say. I mean, I suppose to be fair, I mean, in the defense of Binance, we ought to also say, I mean, $600 between Hamas, funding around could be an AK-47, but that's only like 3 DoorDash vouchers for FTX's staff over the course of the last year. So it might have just been sandwiches or something like that. Probably, given it was Hamas, probably not anything in Margaritaville, because they probably aren't drinking alcohol. But anyway, looking at this whole thing as it's starting to unfold, the reaction of Binance, I mean, kind of shocked, surprised, and indeed a dose of, I think Anne Berg's favorite word at the moment, logorrhea, where they just kept talking, a bit like me at this juncture. Fascinating times in terms of how this all develops. But really, I mean, you keep saying this. You keep saying very definitively, this is going to be the death of Binance. I happen to agree with you. So therefore, I'm probably the worst person to be questioning you about that, because I've said it on record for months, actually for years, that I think Binance will end badly. What do you think the timeline is now? I mean, how are things likely to develop?
I mean, and we talked about this a little bit before as well. The pressure is now on regulators to do something about this. After FTX failed, with its public face, with the amount of attention that they had gotten and given to SBF and his cronies, and the amount of praise they had showered on this industry of fraud, they are under a lot of pressure to do something. And I think that's why the CFTC is acting so resolutely with Binance, is because they failed so miserably to do anything about FTX, and got, of course, the pictures of various commissioners with his SBF and all those other things. Yeah, I mean, could it be tomorrow? It could be tomorrow. Could it be 6 months from now? It could be 6 months from now. I mean, criminal prosecutions go slowly, right? It's like it happens overnight. The other complicating factor is that, Mr. CZ, the CEO, is an itinerant individual who travels around the world and operates Binance from his hotel room. So, my assumption would be that they want to try to arrest him if they are going to prosecute him. So I guess part of the problem probably is getting him in an extraditable situation so they can grab him. But the other thing to consider is that, there's all this focus on the U.S. and the U.S. is important, but there's also other regulatory agencies looking into this guy, right? There's no question that the European Union wants to go after him. There's no question that the UK probably wants to go after him too. So there's going to be an international collaboration, I think, to get him. The question is when and where. My guess is as good as anybody's. Could be soon.
Certainly very interesting, given the fact that, I mean, the last place we think that he was actually living with any degree of permanence seemed to be Singapore. And I must say, at that point in time, I wondered if we weren't going to get extraordinary rendition in the middle of the night. He's been seen a lot in the middle of the Middle East so far. And obviously, actually, the head of his Singaporean organization is actually someone who was previously a very high-level regulator in the Middle East. So it's going to be fascinating to see how that develops. Let's change gears slightly, because I don't think we want to keep just flogging the dead horse of what's going to be 444, the demise of CZ. Jeff Cutler follows up with a very interesting question, building on Anne Berg's question earlier. In the spirit of Anne's psychiatry question, do you have any thoughts about AI and ChatGPT? Will it just reflect human dysfunctions?
I mean, I am not the to understand how large language models work is beyond me. I know a little bit about programming. I know very little bit about the mathematics of that, very little. I think that the whole thing is kind of overblown in terms of people thinking that it's conscious somehow when all it's doing is reflecting us. That's what it's doing. It's read the whole internet, and it can replicate things that look like they're someone thinking about it. I really don't believe that. Will it reflect human dysfunctions? I mean, we created it, so probably, yeah. The question of what we're going to do with it, I think, is the interesting one, and how revolutionary this is really going to be will be very interesting. And I don't think there's any good way to predict that.
I really appreciate the fact that, amongst other things, you seem to have fallen very quickly, given your excellent newsletter, into a position where suddenly it's like what I would call exchange CEO syndrome, which is when you give a press conference as an exchange CEO on your first day, people think you know absolutely everything about the jurisdiction you're in, and they ask you who's going to win the football match of the weekend. So I really appreciate the fact, James, that you've been modest enough to say, you don't really know that much about ChatGPT, but nonetheless, Jeff, I really appreciate you asking the question about AI and ChatGPT, because it's a fascinating thing which is driving a lot of people forward. The one thing that scares me about ChatGPT, for the record, is the fact that it seems so far to be just something that regurgitates presentations of a middle management PowerPoint level basis, which is surely the one thing the world does not need any more of. So, okay. Here we are. We're in the midst of this bit carnage. I know one thing, actually, I have not seen, and maybe you can contradict me here, a single person say for at least a month, well, it looks as if we're getting the first sort of breath of spring air and crypto winter is finally over, because it seems to me that crypto winter is still going in rather full force at the moment. Where do you think we're going to see? Are we going to see V1 of crypto die and everybody return to their basements and eat their mother's cooking for 3 years and then come out with like version 2.0, a bit like we saw with the dot-coms after the dot-com bubble burst in the early course of the 2000s? Or what's the trajectory for crypto as a whole?
I mean, do I think that it retains anywhere near the market cap value that it has today? No. How long does that take to play out? Could be weeks, could be months. I think that any significant action on Binance or Tether would probably be enough to put a pin in it. So that's really what we're waiting on, I think, at this point. Absent some other failure that we're not seeing coming, or one of these guys suddenly just pulls a rug and disappears with billions of dollars. I think we're waiting on regulators to do their part. And what happens after that? I mean, crypto has gone through a couple of these rounds, right? If you look back at the 2017, 2018 ICO stuff, there were a lot of regulations and a lot of regulatory actions and criminal actions that resulted from that. And yet crypto came back. I think a lot of it is dependent on the general economic conditions. So if we're back into another bubble ecosystem of low interest rates and people speculating, then it's very possible it picks up again. Although the problem is going to be now that their chief advantage, which was regulatory arbitrage, that advantage is swiftly going away as the regulators actually act and define what their roles are and crack down on these people. Because after Coinbase gets a Wells notice, it's not like somebody's going to create another Coinbase, right? They're going to have to be more creative than that. And I'm sure they will be. Like, the bubbles are just an inherent part of human nature. They'll come again. I don't think it'll be crypto again, though.
Yeah, it's very interesting, that Wells notice, because I mean, Coinbase's defense is kind of, but we sent you all these documents over the years, and we sent you a prospectus, and you all said like that's okay, but no one told us this could happen. And it strikes me as, well, in some ways that was just your naivete. I mean, alongside the naivete of the many people who have been caught as they've been trying to flee. On which note, I suppose one thing about the turn down in crypto is that it's good for the environment, if only because there'll be fewer people flying private jets and taking photographs of themselves on Instagram for it who are crypto gazillionaires, as seems to have been the thing. And indeed, those people who don't manage to know the difference between Serbia and Montenegro, well, it's not surprising they get arrested at the point in time when they try to get their private jets in a place where Yugoslavia, highly militarized. I mean, it was easy to manage to get a private jet, I'm sure, for a certain sum of money to land in the middle of Serbia, if that's where you were. But anyway, we digress, and I don't want to be seen as somebody who's potentially inciting people to evade the law in any way. Thank you very much, Peter Second. Fascinating, fantastic insight and very thought-provoking take on things. I totally agree. We've reached that point in the show where I think we have actually had all of our comments and questions so far, unless I've missed something. Oh no, we had Martin Watkins, actually. Sorry. Thank you very, very much, Martin Watkins. Patrick and James, excellent IPO vid. Most informative. Best regards, Martin Watkins. That's Martin, who's been building a very, very interesting settlement regime using blockchain in recent months. I hope that's all going terribly, terribly well at Montes, Martin. So let me ask you the question that everybody gets asked at the same point in time in this show. James Block, thank you for illuminating today's program. Where do you think the capital market revolution goes next?
So I do think that the idea of tokenizing assets has some merit, and whether it's done on a blockchain or some other means, I think that making it easier to transact and move securities around between individuals and making there be less barriers between these various markets would be a good thing. Again, though, it has to be done in a way that complies with regulations and is environmentally friendly and actually efficient. So how that happens, I don't know. Do I think that blockchain has potential for some of these things? Absolutely. And do I think that there are projects operating right now that could have value? Yeah. The problem is just that the stuff that's available to individuals for investing right now does not have that value. So yeah.
And I think in essence, I mean, what you're saying there is actually something that's not all that dissimilar to V1.0 of the internet and V2.0 of the internet when we got Web 2.0, because Michael Bloomberg famously noted the internet sucks in the late 1990s. And he wasn't altogether wrong when he said that, I think. A stellar discussion, comments Anberg. Brilliant insights. Thanks so much. I'm a keen reader of Dirty Bubble Media, along with Exchange Invest. Well, that's the sort of viewer that we love, Anberg, to hear today. And I think that you're all the more informed as a result of reading those two great newsletters. Look, let me say a huge thank you, James. It's been fascinating to have you here for the course of this hour. Absolutely thoroughly enjoyed having you on the show. I think you've said so much during the course of things. I'm particularly struck by a couple of the pointers you've made, and there have been so many. I mean, if this technology of cryptocurrency is so great, why aren't Amazon and Google and all these people actually deploying it at this juncture in time? And I suppose on the other hand, we could also say, well, yes, it did run into a few problems when the likes of the Australian Stock Exchange tried to deploy it as they're all singing, all dancing, new technology for settlement, and didn't actually get there when they were trying to replace the aged chess system. So that's absolutely incredible. Montes is flying just like IPO-VID, says Martin Watkins. Delighted to hear that, Martin. That's absolutely super news altogether. Let me say a huge thank you to the many people who've contributed to the show today. Thank you, Marcus Ward, to Peter Second, Anberg. A delight to see you. Peter Second, your questions, as with Anberg's, were all very, very welcome, as were Marcus Ward's. Jeff Cutler, a joy to have your questions this evening as well. Martin Watkins, as always, great to see you. Many other viewers to this show. My name is Patrick L. Young. I want to say thank you very, very much to our guest today, James Block. I hope we'll have you back at some stage in the near future. If nothing else, I'm really hoping the crypto economy survives long enough so that we can talk about it some more. Or alternatively, whatever other bubbles and frauds you manage to discern in the near future, because I think you're right. The art of discerning bubbles, frauds, and so on is not going to disappear whether we see the crypto economy utterly disappear or morph into its next generation. Ladies and gentlemen, my name is Patrick L. Young. It's been a great show this evening. Next week, we've got CNBC's Bob Pisani. He's going to be inciting us to shut up and keep talking. That's going to be an absolutely epic show building on for episode number 101. No Hindenburg effect here, either from the short selling side or the nature of our overall Zeppelin of IPO-VID. Once again, thank you very much, James. Thank you very much to Marianne, Mary, Herminia, and Bata, and the production team, to all our correspondents. This has been an epic show discussing Dirty Bubbles with James Block. My name is Patrick L. Young. Have a great week, whether you're still in blockchain, but certainly we'll be in life and markets. See you next week.